welcome to the channel. My name is ZEC. I'd like to start off by asking you if you would please smash the like, turn on notifications, ring-a-ding-ding that bell. If you like this content and you'd like to hear more, then it would be great if you would subscribe, and yeah, I'd very much appreciate the support. Today's episode, we're going to be talking about the Bitcoin and ZCASH price action that we've seen over the last day or so. I've been a bit preoccupied with some other urgent things, and so I haven't been able to really focus very much on the crypto the last couple of days. But quite a lot's been happening, and to be honest, it's a pretty exciting time. So today we're going to focus on the Bitcoin the daily chart, and that's what we are currently looking at. And we're also going to look at the Zcash, what the implications are for the Zcash price. To be honest, it seems to be playing out just as I've been talking about. We're still within the scope of this accumulation. Wyckoff accumulation area that I've been talking about for the last few weeks. It's still very possible that we break down and that this was, rather than an accumulation, was merely a pause on a much deeper decline. If that is the case, as I said before, we're looking at prices of 20,000. I think for Bitcoin, it will. I think once we dip decisively below the 30,000, once we move decisively out of the accumulation trading range that we've defined here by these purple lines at the top and these purple lines at the bottom, you're gonna have to expect a big move, whichever way. As 20,000 was the previous all-time high, and we've not really revisited that for a retest. There's every reason we could be on our way back there, and a decisive break of the 30,000 levels would, from a technical perspective, almost certainly send us down to 25 or 20,000, as the algos, the bots alone would switch on their sell programs at that point, which would cause a rush for the exits. But we're not there yet, and I tend to still believe that there's enough reason for us to be optimistic, given the macro outlook, given the noises out of the Fed. Although the other day, we have to read between the lines of what's being said. They're talking about tightening, and so we can infer that we're closer than we were previously. But the markets, the traditional markets didn't particularly like it. You can see in the S&P, you can see that there are jitters, and an important trend line has been broken, or at least it looks in the process of being broken. That goes back to March on the S&P. So we would have to consider that there is real scope for downside. But I have a feeling that in terms of Bitcoin, just like with gold, whilst the news may not be great for equities, which could be expected to do badly over the next year or so, in comparison to how they have been performing, gold and Bitcoin, we could really expect them to come into their own, and that's because, if we read between the lines from what the Fed are saying, is that they are noticing that inflation is getting out of hand, and no wonder, considering the money that has been the money that has been brought into existence, considering the monetary debasement that's taking place. The only upshot is the only upshot, if you bring into existence trillions and trillions and trillions more dollars or pounds or euros, the only upshot is that the things that matter will get more expensive. It stands to reason. We are going to have a whole separate video on what is money, but clearly, as we can see from the recent enormous spike in commodities prices, although again there are retracements on those spikes taking place, but as we can see, and as anyone knows, the price that increases that are ongoing across the board are as a result of the monetary debasement that's been taking place. So we could infer that this will be still medium to long term bullish for assets like gold and Bitcoin. Nevertheless, that said, we should now have a little look at what's been happening. I'm going to look at the daily chart because I think really it's more important it has more weight than any of the lower time frames. And if we look at the daily chart, we can see that we have what we see here is my Wyckoff schematic that I've drawn in. But I'd like you to take a little look at this trend line. This trend line, which has been going back to the 21st of February. Now we could argue, although we did have a peak here at 64,000, we could actually argue that the real peak of the bull market, or of the uptrend, was here. It really at 58,000. At that point, it begins to run out of steam. It effectively goes sideways from here on, and this is because this whole period at the top here is the distribution that is taking place as large players begin to become net sellers of their Bitcoin positions. There will be buying and selling taking place because nobody wants to crash the market in one day by offloading, by Elon selling every penny or Michael Saylor selling every single Bitcoin. I know they say don't ever sell, but look, the big players are big because they have nous, not because they don't have nous. And you know, it's I think I'm right in saying it's buy low, sell high. Well, this is high. This is higher, but all along here is high. Let's say we bought at 10,000. Well, 50,000 is high. 57,000 is high. If you bought at 10,000 and you sold at 57,000, you would be buying low and selling high. So we can assume that there are people out there with nous who have acquired many assets in the past, who always continue to acquire assets, and the way to acquire more assets is to buy low, sell high, and then buy on the retracement. It's it's not crypto 101, it's sort of have you got nous 101. So we can assume this was a distribution taking place over these months between February and May, and then by the time by the time the retail investor got wind of the agenda, it was too late for he and she. It was too late for he and she. It was too late for him and for her, and we know what happened on May the 19th. But now we are in. I am determining that we are in this potentially in this nice little accumulation zone. But as you can see, this since the 21st of February, where we maybe would say this was the first indication that the big money has become a net seller. The composite man has become a net seller, and look at this line of support. All this trend line supporting the price all the way to here. When the price breaks under this trend line, it doesn't get above it. It hasn't got above it since May and the 19th until June the 13th, where we had this big little pump. Now, I know a lot of people, and we've talked about this before, a lot of people are thinking or were thinking that this accumulation was taking place on the basis that this here, this test of the 31,000 mark was the spring, followed by the test, and this being the last point of support here, as we had this nice little pump up to 41, nearly 42,000. People were thinking this was the end of the accumulation, and we are now going to be moving higher. Well, we do now have, if not confirmation, certainly an indication that this may have been a premature opinion, a premature position to have taken. It was certainly another test of the upper boundary of the accumulation zone that we are looking at, but the price action over the last day or so has brought us crashing back beneath this important trend line. It looked like we had broken it. We've come for the retest and we failed. And we have failed on. This is the daily closure that failed significantly beneath. And I'm not surprised, because I did always think that would be a retest of this retracement level of the 0.618, which it has tipped down to. But again, today now we're testing this. We're testing the ceiling on this. Well, we have to now say resistance. This trend line, which is providing resistance at this juncture, rather than the support it was providing before May the 19th. I have been talking to a friend of mine who certainly knows his stuff, because this is his bread and butter, and he advised me to have a little look at the Bollinger Bands and to talk about that with you, and I'm glad he did, because I will now. Let's have a little look at the Bollinger Bands, because this gives us a real indication of what's been happening. I think we can probably. Do we need to? Can you see properly? I might take these off. Okay, so let's get that gone. Okay, now with the Bollinger Bands, we can see here we have the 20 moving average is the brown line in the middle, and then we have these the boundaries, the upper boundary and the lower boundary, and the Bollinger Bands work by using a standard deviation from the simple moving average that is plotted in the middle, and so they work to in line with the current volatility of the price, so that you can understand the relative price action, as opposed to simply working on the basis of a percentage move in the price. Now, effectively, what we are likely to see, is if the price bounces off the lower boundary of the Bollinger Bands and crosses above, the price is likely to oscillate. The price tends to oscillate between these upper and lower boundaries. But if we see the price bouncing from the lower boundary, let's say, and crossing and breaking above, in this instance, above the moving average, then we can infer a price target to take profit in the region of the upper boundary. And as we can see, this is exactly what happens. Our last test of the 31,000 lower bounds of our accumulation zone, we rally strongly into a medium-term uptrend, at least, or short-term uptrend, and on breaking above the moving average, we ultimately could have set ourselves a nice little price target right up here at the top end of the upper boundary of the Bollinger Band. And in direct contrast, as we've begun this new downtrend, we can see that we have now decisively broken. We have now decisively broken the to the downside of the moving average, and we should, in which case, be thinking about price targets on the daily toward the lower end of this Bollinger Band. Now, the Bollinger Band price target on that basis might be somewhere around $33,320 dollars. And I'm quite interested to note that if we draw a little trend line from here in parallel to the trend line, this long-term trend line, we could imagine in which case, if this were a shoulder, a head, we could imagine a head and shoulders pattern emerging. Now, I would not be surprised to see this, because we already know that we've already established these lower boundaries as strong areas of support, and this will be coinciding. This trend line will be coinciding exactly, dissecting completely across this important lower trend, penultimate support. And also, I think that we can actually bring back our fib retracement. I have a feeling it also dissects the 78. Yeah, look, it coincides also with the 0.78 fib. So for this to form, it would only begin to form the neckline. We wouldn't have actually formed the shoulder yet. So I believe the way I'm looking at this is there are points of confluence. There's a point of confluence because we have the lower end of the Bollinger Band on the daily. Let's take this away. Sorry, the head and shoulders. Let's take that away. There we are. Oh no, I've taken the wrong thing away. Let's take it all away. So we have the lower band of the the lower boundary of the Bollinger Band on the daily is coming in at around 33,000. That coincides, as I showed you, with this. Let's bring it back up just so you can see it. That coincides with the 0.78 fib, which will almost, or not almost certainly, but will likely lead to a bounce in any case. And so we have this point of confluence, the Bollinger Band, lower boundary, the 0.78 fib, and also we can see that this would create a trend line in parallel to the very important trend line that's been going back to here. Now we could also even extend this, and we could even see that this has actually this trend line has actually provided support. Resistance here, it's here, so in actual fact we could quite easily make the case that we may have defined a short-term channel for the price to trade between on its path lower. This all ties in with uncertainty in traditional markets that's certainly due to take place looks likely to take place over the next week or so, and then ties in with the overall narrative that I've been talking about, that we are in fact heading towards perhaps the spring, or certainly another test of these levels. I am playing on the basis that we are heading down we are to be heading down a channel such as this towards a retest of the 30 to 32,000. Maybe if it is the spring, we might see it pop down to 28, 29,000, or possibly lower. I think if the price of Bitcoin breaks decisively lower, it would suggest that maybe we have the spring, we have this test, maybe it fails, maybe at this point it fails. And if it starts to look like it's going to move decisively lower, then I would really start considering my position very carefully, because you could find yourself at 20,000 as soon as without too much ado whatsoever. But for now, I assume that we will trade towards the lower end of the Bollinger Bands over the coming day or so. That will take us initially to to perhaps form the neckline of a new head and shoulders pattern down here. So that will form the neckline here. At which point I would expect a bounce. So you could perhaps put in a trade and look to take some profit, maybe a retest of this downward trend, this trending resistance that's been so important in the past at 36,000-ish. I don't expect that to hold, and I don't expect that to break in the short term, and therefore I would expect the shoulder to complete. How quickly, whether we have another bounce, we maybe move between this down this channel, we maybe oscillate a little bit further within the Bollinger Bands, testing the moving average, testing the lower boundary. This could continue for a week, for a few days. Maybe it happens quicker, maybe not. But this is the general direction that I am looking at. I think that we can also look at the ZCASH. We can also look at the ZCASH. Where do we go here? All right, we can look at ZCASH, and if we look at the Bollinger Bands on the daily ZCASH, I think that this also kind of suggests, I think that we are not going to imminently move considerably lower, or at least that the market doesn't think that. If we look at the Bollinger Bands on the ZCASH daily, we can see it's not actually looking quite so glum. We are currently at $131 on the ZCASH. We have recently tested the moving average, relatively recently here, and you would have to again infer from this that we are on our way back to sort of 117 at the lower, 117, 118 at the lower end of this boundary. But at least on the 1 day, this isn't quite so gloomy as the Bitcoin price, because on the Bitcoin price, no, I suppose, no, in fact it is more. It is just the same. So in fact it just ties in. So on the Bitcoin, the 1 day Bollinger Band that's what's happening. So the 1 day Bollinger Band is offering us a potential price target of 33,000 here. But I think if we were to move to I think that's the thing, if we move to the 2 day, I think the 2 daily is where we see things become a bit clearer. So on a 2 day chart, we can see that the lower boundary of the Bollinger Band is just under 31,000, which is bang on where we might expect our spring, or certainly our test of the very lower boundary of our accumulation zone, which is where we tipped below here, we tipped here, we tipped here. I think we're due another, and this might be the spring that we've been looking for. So I think on the daily, we're looking for a test of this lower channel, which might form the neckline of a head and shoulders pattern. That's over a daily time frame, after which we can expect a bounce to sort of 35, 36,000 to retest this long-term support and resistance. And the rot won't stop there, because to fail to get above this trend line would likely lead to further downside. And in the current macro, with the current fear that seems to be growing in traditional markets, this might make sense. And as we can see on the 2 day, it's simply the case that the lower boundary of the Bollinger Band is down here, and we have already tested and failed to break above the moving average. So we are in fact trending downwards on the 2-day. We're trending down, and where are we trending down towards? We're trending down towards 30,800. Okay, now again, we could assume. I think let's even look at this. Look at the weekly. I don't know what the weekly does. It might be horrifying. Let's see. Reset. So on the weekly, you see, even on the weekly, I think this all supports the same argument. The weekly lower boundary on the Bollinger Band is down at 30,800 as well. So, and again, we broke below it. We've been trading in this range, and we haven't yet seen anything to suggest that we are actually on the weekly quite ready to move back up to test this moving average at 48,000. So I think on the weekly we're waiting. I think we need to see what happens on the 2 daily, and on the 1 daily over the coming days and weeks. We will see what happens. It's if we get a bounce here. It's if we get a bounce off the lower boundary on the 2 daily and the 1 daily that we can start thinking about a move towards 48,000 perhaps on the weekly. And maybe not even. Maybe we really will consolidate and accumulate between this support and resistance for some weeks and months to come. Maybe it just is going to take a long while. But let's see. Anyway, at the moment, we are trending down. We've tested the moving average here on the 2 daily, and we're trending down, presumably to test the lower end of the range, as we have done here and here. And I would say that, as I said before, that the points of confidence to look for are the 0.78 fib retracement here. This, I think, lower end of this range then in turn coincides with the number 1 retracement, basically a full retracement of this last up push upwards that has this last rally up which has failed and is coming back down from this rejection of the moving average here. So that said, we can look back onto the ZCASH chart, and I think basically what we can see here just really reinforces the same ideas. I don't see much hope of the ZCASH price imminently breaking through this EMA ribbon. It's been held down quite decisively thus far, and with things looking as they do for the Bitcoin price, I could imagine sideways action for the time being with ZCASH being on the agenda. The lower boundary on the Bollinger Bands being around 116, which ties in with our previous lows before the last rally. So again, the retracement, the 100% full retracement of this rally, which makes sense, especially with ZCASH, which likes to do that. And on a wider scale, 100% retracement from this point ties in with, which is down to about 80, 89, and that I think ties in with the 2-day. Let's see, 2-day Bollinger Band lower boundary. Oh, it's even. Oh, don't look at that. So well, it maybe even lower. It looks like we might even on the 2-day. We have a lower boundary of 65, around about $65, $67. So, well, I'm not 100% sure I believe that, but it might be. I'd love to buy ZCASH down at those levels. That I suppose that could imply that we might see sub 30,000. this is what will happen if we do see sub 30,000 without shadow of a doubt. If we see sub 30,000 Bitcoin prices, even maybe only even if it is a spring kind of a shakeout on the Bitcoin price and it dips down to 28,000, yeah, that might be enough to bring ZCASH down to 67 or $70. Don't forget it did tip down to 89. Was it 89 or maybe even 86 or $87? Yeah, 87 the low on this last test. So you know, I've drawn previously this double bottom. That might look quite believable as something that might happen, to create a double bottom with a slightly lower second not peak. What's the opposite of a peak? Whatever we call that. So I don't know. On the 2-day on the ZCASH, it looks a little bit more gloomy. In fact, although we haven't actually really been back to test the moving average here since we broke below it back on May the 19th. So effectively what we've actually been doing is moving in a range on the 2-daily on the ZCASH. We have broken below it, but not decisively on the 19th and also again here. So effectively we've just been moving in this well-defined range between the support and resistance. And if anything, you might like to assume that we might test the moving average before we were to test right down on the 2-daily to this level. So perhaps we shouldn't go calling for prices of $67 just yet. I think I would certainly be a buyer anything like $80-90 ZCASH, and if the price with the one caveat that I would also be very ready to sell if Bitcoin looked like it was giving up the ghost decisively below 30,000. But you know, in general, my bias is for us being in this accumulation range in terms of Bitcoin, and for us to test the lower end of this range. I will be ready to flee the scene of the crime if prices do begin to really wobble horribly, and I probably would be also looking to flee the scene of the crime and head towards somewhere like Bybit for a bit of leverage shorting. Now, I wouldn't recommend doing that to anyone else, but I would probably have a little go myself, because I think if it does break below the decisively below sort of 28,000, I think, you know, there's a nice little short on the cards. But actually, strike that. Don't go shorting anything in that way. You don't need to. If it does break down to 20,000, just buy it. Just buy the unleveraged, buy the spot price, buy the asset, stick it in a wallet. At 20,000, you're winning. At 10,000, you're winning. You know, I would just accumulate. Don't short with leverage. Don't long with leverage. Don't trade with leverage. Okay, so I think that pretty much sums us up today. What's the price at the moment? We're at 35,795. Yeah, we're, you know, I think it's pretty much going as expected. So yeah, I hope that helps. Happy hunting, and see you next time.